Welcome everybody. This is the Thursday evening Viper trading webinar. If you are here to learn about trading the futures market, excuse me, you're in the right place. No, gotta wake up here. Let me get the standard disclaimer out of the way and then we can get on with the webinar tonight. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading rooms, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. Good. All right. Well, tonight we have the primary topic tonight is called using longer-term charts and incorporating them into your trading. And so here's what I'm going to start off with. And I'm going to start with this. So I'm going to show you some techniques that you can start using as early as tomorrow or tonight or whenever you start trading your next trading session. Let me get you over to screen one. All right. Now, there are several different methodologies of how you can incorporate longer-term charts, larger range bar charts, if you will, into your trading. And I'm going to explain that right now. I'm going to start with the 16 range. Now, many years ago, when Viper was kind of getting kicked off, Windows always does this scheme change right as I'm getting started in a webinar. I don't know why it always does that. Anyway, we used to, a long time ago, we used to actually trade with two charts. I don't know if anybody remembers that from the old days. We would have a 12 or a 14 or a 16 range is what we called guidance. And we would actually take that chart and position it sort of off to the side like this. And this would be kind of our guidance chart. And then we would take a 4-range chart like we trade now, and we'd put it right next to it. And our trading setup for instruments would look kind of something like this. Okay? Look kind of something like that. All right? See that? And so that's how we used to trade. And we started to get away from that when we introduced what we call these swing levels, the line in the sand and mastery. So essentially what's happening is some of the swings in the trend direction from these larger range charts has become incorporated onto the trading charts by way of these indicators here. Okay? So it started to eliminate the need to have a secondary chart to look at. However, I should point out the fact that there is still a lot of value in looking at these larger range charts because they can give you, yeah, the charts aren't moving, Jesus. I'm explaining, I'm giving a little bit of background here. And in a minute I'll get into explaining how to start using these charts together because it's really important and good for your trading to go back and look at something, these 16 range, these larger charts. Let me start explaining on how you can do this. Let's take the 16 range here. Now, here's how I like to use these charts. There are times when this chart, the 16 range, can provide good guidance to you in terms of trend guidance in certain parts of the day. And there are certain times when it can let you know that the market is chopping, and it can let you know that ahead of time that you can put right on your charts. Now let's say, for instance, let's start over here and work backwards. Generally speaking, from, I would say, right about here, let's see, just to orient you, let me orient you just put this all in perspective as you're looking at this chart. And you can put up a chart like this on anything, and we'll look at the Russell, we'll look at oil, we'll look at several other charts like this so you get a sense, right? Here's today. I'm in California, so this is Pacific time, so midnight Pacific would have been right here. All right? Here's yesterday, the 30th. So what's today? Thursday, Wednesday, Tuesday, and here would have been Monday. All right? And then we go into last week. You know, here's last Friday, the 25th, and then here's last Thursday, and then here's last Wednesday. And so now you're going back over a week. Now, the main thing I glean from this when I'm using it is certain trend patterns that look like this. And you can see this as it happens in real time, but I'll go back and show you just some patterns that I like to look at when I look at the 16 range. First of all, you could make the case that over here on Monday, there was more or less a V-bottom situation here. And ever since this V-bottom on Monday, the market's been doing what? When you look at this chart, what's the market been doing? Since this point right here on this chart, sort of the midpoint on Monday, between the end of last week, which is over here, and then this would have been Tuesday, and this would have been Wednesday, and this would have been today. The trend has generally been up, right? In other words, coming into the end of last week, we had a lot of sell-offs on here. You know, early in the morning, shorties would have their due, as you can see here and here, and this is a 24/7 chart, so it picks up the overnight into the next morning. So you had a nice down here, you had a nice sell-off there, you had a nice sell-off here, and it was punctuated by some of these sort of retracement moves up like this. Market would come up early morning, roll over, sell over, sell over, sell over, find support, and then chop around for a while and then repeat that pattern into Monday. Monday was the exception because we came down and we bottomed out late morning, and then we started our ascent over here at the end of Monday. And ever since then, we've been more or less trending up. So what this means is that, however, you have to notice a couple of things. Overall, you can see that the trend has been up, but it's been punctuated with these periods of sideways movement. Wouldn't it be good to know ahead of time, as you look at your trading chart, that your market is in a range? Carlos, can you see these lines? Everybody see the lines I'm putting on the chart here? Everybody see these lines I just put up? I put in a line down here. I put in a line up here. You see these lines? Everybody see my pointer moving? Everything okay? Pointer moving, lines going in? Yeah, Carlos, I don't know. If you're not seeing anything, you might need to log out and log back in. That might fix it. Everybody says they see the lines in the pointer moving. Yeah, you should see it moving. If not, just log out and log back in. Jesus had to do that. He was having problems with audio and video. Yeah, just log out, log back in, and everything will be cool. Yeah, so what you're doing here, essentially, by putting this longer range chart up, is you're just getting, it's going to give you a couple of things. What you're going to glean from this is going to be an overall trend flavor for certain parts of a day, and then this is called the longer term perspective, or the longer term trend. And then intraday, you're going to have an opportunity to use this on your charts. Let me give you an example. Let's look at a couple of days here and see how this information could have helped us. And then what we'll do is we'll do this on a couple of days on a couple of different charts and really start to get a sense of how you can take the information off a chart like this and use it to trade intraday on your trading chart. So I'm using NASDAQ here. $5 a tick. Here's the open of the market. And we got this zone thing on here. Let me take that zone thing off. hold on, stand by. I've got this zone thing on here. I don't want to, it's kind of putting some lines all over the place. Just give me 1 second. I have this indicator I want to take off. Just give 1 second, please. Where is that puppy? I should have taken that off. Just give me 1 second here. Loading back up. Loading, stand by. All right, can you see the 16 range chart on the left here? Right next to the 15, I mean to the 4. All right, so I'm going to blow this day up. I'm going to blow today up on the left. I'm really going to blow it up like that. So it's very much more prominent. And you can actually take this trend line and draw it more a little bit like that, or you could have even drawn it more like this. And I'm going to put one line on here. I'm going to put a couple of lines on here, more or less kind of right in here. Some critical areas. Now, going into the early morning session right here, the market looked more or less on the 16 like this. All right? Now, you could make the case that the overall trend is up. However, we were consolidating in a fairly tight area between support down below this 75 area and resistance up here around 88, 88.50. And it was just sort of bouncing around in here. Now, on this chart on the right, that area looked more or less like this. Now, I should say that we have a rule of thumb here. The rule of thumb is that, generally speaking, some of you may already know this, and it's a simple way to look at things when you have all these indicators on here. You don't have to put all these other indicators on here. Some people find it confusing. You can use more or less of the indicators, but generally speaking, when you're above the mid-band, you're looking for long trades. And when you're below the mid-band, you're looking for short trades. And the only exception, or one of the exceptions to that, is when the market is oscillating around the mid-band, as it did right here, or as it did right in here. This is telling you that there's no trend and it's sideways. But the helpful thing that you can glean from this is that if the prevailing trend is up, what you want to be doing is you're going to be buying these dips. Right? Here we had a dip right at the open. Here we had some dips into support that popped back up to our resistance levels, which was defined on this chart. In other words, we knew going into the open where these swings were because it happened overnight in the overnight session. So you're buying here at support, and if you're trading the range and you're buying support, you're taking profits up at the resistance level, which was already defined. So when you're buying here, you're taking profits up here. You're not shorting in this particular case because the prevailing trend is up. Once again, you're buying, you're taking some profits. You're buying, you're taking some profits. You have an overall trend direction of up, so you're taking long trades. You dip down into support, you're buying support, you're taking profits, and then right here at about 7:30, just after 7:30, we break out of this range and we start heading up. Now that move, this move from let me just show you this. This move from here to here is this move over here. I'm getting confused between these two, trying to put the two lines on each one. This move up on the right is this move up on the left. So it became very clear when this resistance level was taken out right here that it held for most of the morning that we were heading up and you were looking to buy the breakout and take the trade. Another tool you could have used here would have been Object Trader. You could have put Object Trader on here and activated the long entries and been taking longs and taking profits up in here. You could have been using the line tool. So in other words, let's draw a line on here and show you how the line tool. The line tool looks like this. And then you activate the close right here. And when you get a close above it, you get long. You would have been long right in there using the line tool. Use the line tool on the retracements. So the prevailing trend was up, so you're buying support level and you're taking profits at resistance. Now, when we break out of that resistance level right in here, now we're heading up and we're buying retracements as the trend goes up. So our prevailing trend is up. Now, let me ask you a question. I'm going to advance this chart. We all see how we traded up until about, I don't know, looks like about 8:45, 9 o'clock, right over in here, where we get this peak. So the peaks correspond. Here on the 4 range, the peak looks like this. On the 16, the peak looked like this. There's a peak up here. Now, I'm going to advance the 4 range, and I'm going to ask you a question. I'm going to blow up the right-hand side. Has the trend changed now at 9 o'clock, after 9 o'clock Pacific? Is the trend still up on the 4? Yes or no? Right now, if you had a chart that looked like this, is the trend still up on the 4, this chart, over here, we're looking right in here. Is the trend still up, yes or no? Straightforward question. It's just a yes or no answer. No. Why? The trend has changed, yes? Let me advance it a little bit more so you can see. Oh no, don't lock up on me now, Ninja. Come on, little friendy. Okay, that chart's moving. There we go. Okay. There, I'm advancing a little bit more of it. Color change below the mid-band. Good, Jesus. Roger, below mid-band. Looking for the pullback. Okay, good. Yeah. This is the telltale sign. And this is almost a textbook trend change afoot. When you come through the mid-band and you come down to this area here of support, you push back up into this area and it holds as resistance right up here. And then it rolls over. That is your trend change right there. That is your trend change. That is the definition of a trend change. It came right back up to a prior support area. It holds it as resistance. It rolls over. The background turns red. You have a red stealth. The bars turn red. Everything starts heading stair-stepping down. Now you're selling resistance. You're taking shorts here. Everybody see that? Here you were trading the long side. You're buying profit, buying profit. Retracement, buy, enter, take some profits. Band-Aid, you're buying. You're long, 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 long. Peaks out, double top, rolls over, and down we start going. All these retracements where the market is pulling back up to resistance in a downtrend, these are all represent shorting or selling opportunities right in here, right in there, right in here. So what we're doing is we're selling resistance and taking profit as the market moves in our favor. That's why when you hear, like in the room, when a market puts in, like here for instance, this was after the market closed. Market closed at 8. Live trading room closed at 8:30, so the market was peaking out when this happened. Okay, so we didn't get in to take these short trades, but essentially had a trend reversal right in here. Market comes through the mid-band, puts in a lower swing, You get a trend change, and now we're looking for shorts. Now you're looking for shorts. So for instance, out of this Band-Aid right here, let me give you an example. I would not have taken a long trade out of the Band-Aid, and if you did, you should have stopped out of it pretty quickly after it popped up here to resistance. Yeah, I broke the trend line and started putting in lower highs. You know, most people do use trend lines. I do too. It was pretty straightforward to see it was broken right here when the market went into a trend. This was the pivotal area it had to hold right around 3,600. And then you started the sell-off. Each one of these pullbacks was a selling opportunity, selling opportunity, selling opportunity. All right, good. Do you see that? All right. We could go look at a different day on NASDAQ, or we could pull up a different market. Let's take a poll of the team. What other markets might you want to look at where we can do an analysis like this? Go ahead and type a couple instruments in here, and we'll change it up. We'll change it up. Let's put something else in here. We're done looking at NASDAQ. By the way, did everybody find that helpful? How we looked at this and how we analyzed this chart? How it guided us early in the morning within the range? How we saw early the trend was up for the first part of the morning, and then when the trend changed, we started looking at shorts. I don't know if that helped anybody. Let's put another. Yes, you find that helpful? Okay, good. All right. We got. Let me jot down the instruments we got coming in here. Okay, we've got TF, CL, YM, Diane, YM or CL, Aaron, Doug. YM, TF, CL. There's an ES sprinkled in there. Okay, good. All right, so let's do this. Let's put the Russell up. By the way, for those of you who want a free trial or just 1 week visit or whatever, and you're possibly looking to join us, strong suggestion here to start off with YM or NASDAQ. They're $5 instruments. You can make decent money on these. I trade them all the time. I load the boat on contracts. But if you like because they're $5 instruments, you can put, I like to put more contracts on. Here's the Russell. It's a little bit more of a high flyer. The retracements are a little deeper. The movements are bigger, and it's a $10. It's a $10 instrument. So in terms of risk, it's a little high flyer. It's a little bit more of a risky instrument. Some people find it a challenge to try to trade it right out of the gate until they get their sea legs about them. All right, let's put a 4 on a TF up here. Oops, I got an old sim position on here. Let me see if I can close that. Stand by. Got an old sim position left on. I was going to take that off of here. I logged in another machine, and it left that sim position on from earlier. There we go, clean chart. Let's get the Russell up over here. All right. I would suspect that the Russell chart's going to look very similar. We don't have to analyze today. We can go back and look at a different day on the Russell. But you can see the swings are huge and much more different than the NASDAQ chart. Let's take a look at today on let's just spread the 16 range chart out here a little bit, and you can see that today we just had some nice swings. They're actually a little bit more pronounced on the Russell than you found on NASI. Here, for instance, you saw that you were selling off. There was a pivotal swing here around 1450, where now you start to head up. Yeah, like that. And it rolled over and started to head down through here. You got quite the roller coaster. Yesterday, similar price action. Yesterday morning, you had the sell-off here. Started to come up mid-morning, late morning. You had a kind of a little consolidation patch in here for a couple hours, and then into the close, you had a nice run up. So you were trading the long side into the close if you traded that part of this market. Had a sell-off in the morning. 7 o'clock breaks up, consolidates. You would have transferred these support and resistance levels right onto your chart, right onto your trading chart. Once you establish that swing, and then you can decide if you're going to trade the range. You can can use Object Trader to trade the range if you wanted to trade it. Now, take this day, for instance. Let's say today was the 1st. This would have been Wednesday. Now, on Tuesday, what does Tuesday look like here? The 29th. What do you think about Tuesday? What does this day look like to you on the Russell? Right here, Tuesday. What would you have done this day? Is this a roller coaster day, you think? What do you think, looking at the 16? Consolidation. Spent most of the day, in fact, quite frankly, almost the entire day in this range right here. Right here. That day was sideways. Yeah, I'm trying to show you the contrast in each of these days between a roller coaster day, which looks like this, and looks like this, to a day like this. Well, you don't necessarily lose money, Gamini. Let's take a look at the numbers here and see if this was tradable. You know, you had support around 11.16, and resistance was up here around 22.50. The prevailing trend going up into this day was up. You have a green background and blue bars, and so generally speaking, you would have been buying support on days like this and taking profits at resistance. That's a pretty decent size range. I mean, you're looking at you know, support here at 16 and resistance up here at 24. You know, that's 80 ticks. That's an 80 tick range. Yeah, these little ranges are tradable. But the point being is that you would have been buying support and taking profits at resistance. Now, I have to say this. Some of you don't like consolidation, and some of you do. Some of you like trading ranges, and some of you don't. If you're not proficient at trading ranges and you don't like it and you're not good at it, you find that you lose money, then you would take a day like this and simply look for other markets to trade. All right? And until you can develop the skill set where you're comfortable to trade ranges like this. Let's go back a couple more days. This would have been Monday. How about early morning until about 10:30? What do you think about the Roosty Bird on Monday morning? Yeah, you want to be shorting that. All Monday morning until about 10:30 Pacific. See this little swing here, how the trend changed? Right here, you get this push up, retracement, higher low, higher low, higher low, higher high, starts the trend back up. Trend change at 10:30. Then you go up and you consolidate all the way over here. Let's take a look at Friday. How about Friday? This is Friday the 25th. What direction would you have wanted to trade on Friday the 25th? What direction would you have traded all day, all morning, all day, and all afternoon on Friday the 25th? Jesus says shorting. Steve B says down. Short. Lewis, shorting. Trading the downside. Perfect. I love days like this. Don't you love days like this? I just love days like this. I mean, you know, it doesn't get much better than this. When the trend it's so clear, the whole day is down. Down, 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 down. Every retracement that you would have had on that 4, you would have been selling into it. All these retracements here up into resistance were all sell. These were all sell signals. And you take your profits at support as it drops. All these are sell. This is all selling. Well, it's not necessarily easy hindsight, Stephen. Let's do this. Here, let's pretend we don't know. Let's go into that day like we don't know. This would have been overnight. Okay, let's do this. Let's do a little exercise. We get that question all the time, so it's always fun to address it. All right, let's pretend we don't know what's going to happen. Here is Thursday going into Friday morning. And here is the early morning here, so we had some chop from overnight. Here would have been the afternoon and into the close on Thursday, so it was very choppy. Bars are yellow, going sideways, right? See that? Here's the 25th. Here would have been Friday at midnight Pacific. What's happening here? Let me blow this up and make it a little more clear. Let me just make this clear. Here's the consolidation, and what's happening to those bars right there. In real time, if you were watching this, what are these bars doing right here? Are they still sideways? Are they heading up like over here? What direction are these bars going? In real time, if you were watching this and it was red and going down like this. Here, let's advance it a little bit more. How about now? How about now? You're right at the open. In real time. We'll just pretend in real time you're watching this, and you're watching it on the 4. What direction is that telling you to trade? Here, let's do a little bit more. How about now? Yeah, it's short. It broke short. It's red. It's dropping. All the bars are dropping. They're retracing. You're getting a classic downtrending pattern. The background is red. It has a red stealth. All the dots are above it. It took out support. It bounces. It's got a classic downtrending pattern. It's telling you short. So when you translate and you look at a 4-range chart, let's go look at a 4-range on Friday morning and see how we would have traded that. Let's go back on the Russell to the 25th. See how we would have traded that. Let's go back. Where's the 25th? Here's our uptrend. Taking the longs. The first. We got to go way back. Hold on, stand by. Let's scroll back to the 25th. That would have been Friday morning. There's the 30th. 30th was Wednesday. Still going back. Got a lot of bars here to cover. 29th. Okay, we're getting closer. I think 28 was Monday. Let's scroll back. Getting back to the 25th. What day was this? Stand by. Getting closer. 27th. That's Sunday. And the 25th would have been right over here, I think. Yeah. Here was the 25th. Right here. So midnight Pacific on the 25th would have been right here. And midnight Pacific on the 25th on the left chart would have been right here. All right. So as these bars were descending and putting in fresh lows and then coming up and hitting resistance in a classic trending pattern down, this was the movement that you had here overnight setting up on the Russell. It would break down, it would come up into resistance and hit the midband and roll. So all this area here, as this market was descending, each time it retraced, because we prefer to take retracement trades, this would have been all shorting opportunities. This would have been all shorting opportunities. Every time it retraced up. Here's the congestion that you're looking at from this box here going into the prior day is this area right here. So, I mean, you know, with all due respect, I mean, you would have known way back over here midday on Thursday that you were going sideways. Can you see that in this box on the left? Everybody see this on the left here? And that translates to this. I mean, as it's unfolding, you would have known that was happening. And then you go into the morning and we start to have our descending, dropping down, selling off pattern, which then materialized itself over here. See it? See the market dropping, coming out of the sideways patch right here, starting to drop. We come back up. Each time we retrace, this is selling opportunities. Selling opportunities. We're taking direction from the 16, which is down, so we're looking to short. We have a retracement up to resistance. We take another short. It rolls over. We're short again. I mean, it is possible to see this and trade it in real time. I mean, we do it every day. That's what we, that's what we do. That's our forte, is to be able to clearly see what the trend is and trade along with the trend. What do yellow bars mean, congestion? Yes. Yeah, this whole time that you were going sideways here, in this box right here, what I'm saying explicitly is that this box here on the right, on the 4, corresponds with this box here on the left, these yellow bars. Generally speaking, yellow bars mean congestion and lack of trend direction. And generally speaking, blue bars and a green background mean uptrend, where you're more or less looking for buys. And a red background and red bars generally means that the market's selling off and you're looking for shorts. All right, let's continue to advance this, and then we'll pull another chart up. Can you stand by for 1 second, please? 1 second. Okay, sorry about that. I'm back. Can you hear me? Everybody hear me? Testing audio, can you hear me? Hello, I'm back. Testing audio, can you hear me? Hello? Yes? A-okay? Okay, good. Sound is good. Okay. All right, so what I want to do is I want to continue this day on real quick on the Russell, and then we're going to flip over and pull a crude oil chart before we run out of time. Little background noise? Okay. So as this market is descending, I'm going to advance the chart on the left and expand it out a little bit so you can just get a whole vision for how the whole morning played out. And I think I want to address a particular area that we see a lot of traders become an issue with them, and they struggle with this. The topic of trend change, and we talked about trend change on the other chart. And what I'm talking about is what we call deep probes, where a market goes much deeper in its retracements than the mid-band. And in this case, it does not constitute a trend change. For instance, right here, see how deeply this retraced before it rolled over? If you look on the left, that was about 6:40 a.m., and that would have been somewhere right over here, right over in here. What I'm saying explicitly here is that would have been, no, that would have been more or less right in here. This retracement here equates to this retracement right here. You can see on the 4, it's very much more pronounced, right? It goes all the way up to here and checks this resistance line, whereas over here it hardly looks like it moved at all. See how it's red and still heading down? So the trend is still down. So you're still selling retracements and taking shorts. The trend has not changed on this one. The trend is still down, and you're shorting it. All the way down. All these retracements. Each one of these was a sell short, shorting opportunity. In this case, the 16 actually helped you quite a bit because it kept you with the prevailing trend, which was down. What we find a lot of times is that, it's easy sometimes when you get some blue bars on here to think that the trend has changed and you're heading up, when in fact the market is still heading down, and you wind up, if you get into some long trades, you wind up getting stopped out as the market comes down against you. Here we get another protracted retracement, sells off, and we put in fresh lows. The whole day was down. Now let's see, yeah, all the way here, fresh lows, retracements. Let me ask a question. Looking at this chart, these two charts together, are you finding that the 16 trend direction? Do you find it helpful or confusing? See all these retracements? The trend direction was down. What do you think? Do you think you find it, just some honest feedback, do you find it helpful or confusing? Or maybe some of you are looking at it for the first time and haven't really sorted out how you might use this information together with each other. It's good for trend, Lewis. Yes, it is. Very helpful, says Diane. Okay, helps a little bit. Aaron, helpful, says Gamini. Looking at the 16, I have no reason to take any longs until it breaks the 16, says Jesus. Helpful in the micro trends and overall trends. Good. Yeah, it really does. It really does. I would submit to you, for whatever instrument that you like to trade, if you can, try to pull up a 16 range chart as you're trading it live and watch what it's telling you. And then take what you've gleaned from this on the left here in terms of trend direction, support levels and resistance, whether it's going sideways, whatever your interpretation is, and apply that to your 4-range chart. All right, most of you requested to look at crude. Let's pull crude up, and I have a crude on another screen. Let's take a look at crude overall. Will it affect my charts if I change to NT Renko bars? No, Diane, it will not. What I'm saying is that the same analysis that you would have from this chart on the left, the 16, in terms of trend and support and resistance, would apply to any chart, 4-range, 6-range, Renko bars. Some people trade a 1-minute or a 5-minute tick charts, all those things. Here, for instance, you can see from last week that the prevailing trend was down. However, there was a couple of days where you had some serious consolidation. In other words, crude stayed in a very tight range all day. For instance, this would have been, let's see, 25th was Friday. Here was Friday, so your prevailing trend was down on Friday on crude. But, you would make the case that all the way from Wednesday and Thursday, you spent most of those days in this range. What I'm saying is you would have taken the support and resistance levels that you saw all the way from here, put them right onto your 4-range or your Renko or whatever you trade, and you would have traded, support to resistance here. The indicators I have on here, let me see if I can pull that up, Chris. Yeah, it's let me see if I can tell you what, let me pull the indicator box up and see if I can show you that real quick. Indicator box. Well, here, no, you can see it up here. Stand by. It's up here at the top. I've got the background stealth transition. See them up top here? I've got the bar color, breakout identified swings, identified swing minor. I've got the swing high and swing lows and the trailing stops, and that's it. So I don't have like any of the Band-Aid. There's no the bands are not on here. I don't. We tend to use the Band-Aid and the bands and the other tools for seeing and taking the trades themselves. For me personally, when I look at the 16, I like it to be a little more clean. So it's just sort of skinny down. So you have the bar colors, the backgrounds, the swing levels, and I think that's a lot cleaner and easier to see what's going on. Let's go back on crude here a little bit. Here, for instance, this would have been Monday. Or no, the 30th would have been yesterday. The trend was down. And today you spent the entire day more or less chopping around sideways like that. Let's go back and look at a couple other days. I mean, basically, you can look at it almost an entire week at a clip. I mean, here, for instance, this week, this is what really drives people crazy. And if you put up a 16, you would have seen this early on, as far as back here. Let's go back. The 25th was here. This would have been the week before and the week before. I mean, here it would have been pretty clear as far as back as the 14th that oil stayed in that range for 2 weeks. You see that? You knew those swings back here on the 11th. Yeah, from early in April, the prevailing trend was up. So you would have been trading the long side of this market all the way up, all the way up, all the way up, every day, up, up, up. And you know, here you had the reversal. Trend was down early April. You had the consolidation patch for a couple of days where it was yellow and we would have gone sideways at the second and the third, and then we went into this beautiful, nice uptrend. Oil was going up, 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 up. Let me get this chart squared away here. And then essentially for about 2 weeks you went into this consolidated sideways pattern right here. Support at 102.50, 102, and resistance at 103, 103.50. Down into support, up to resistance. Down into support, up into resistance. Excuse me. Levels, and you put them right on your trading chart. I'm telling you, it's going to make a big difference for you. Here you break out, you consolidate, you start head lower, and then here we are today. So let's take what we see here on today and yesterday and see how that would have applied to our trading. Let's put the 16 here and drag an oil chart down. Stand by. Here's the oil chart. So, for instance, these yellow bars that look like this part of today, more or less right in here, this patch of bars corresponds roughly to this patch of bars. See how we're kind of going sideways? See how these bars are yellow? This peak of this spike right here, just to orient you on this chart right here, corresponds with this spike up and this peak right here. Everybody see that? Wednesday was inventory day. So you can see that going into the inventory numbers, the prevailing market direction was down. And that would have been over here. So this line right here in the early morning, at late evening, early morning of the 30th, which was Wednesday morning. Today's Thursday. That's right here today, the 1st. Right here is this area right here on the 4. So obviously, as you see, just like we saw in that other chart, the Russell chart. Remember that chart where we had the 16 and the 4 together, where the prevailing trend direction was down? Remember this one here? So we're selling up. When you come up into resistance levels, we're selling. We're taking prevailing trend direction is down. The whole day, all morning, all the way until the trend changes, we're shorting this and taking profits on our drops. Similar condition on crude oil yesterday, where you have these enormous drops, retracements, very deep retracements. You're shorting Here you have a Band-Aid. You would not have gone long here. Prevailing trend is down. So you're shorting resistance and you're taking profits as it drops. Question coming in here, when is crude oil inventory? Now, let me just show you that real quick here in the site that we use to track that. Does everybody know about this website? It's called Forex Factory. Everybody bookmark this site. Everybody know about this site right here? Everybody bookmark this site? This site is called Forex Factory, and let me explain what it is. This has pretty much most of the news that affects the currencies. Okay, Chris, thanks for coming. A couple people have to take off. We're going to be wrapping up here in a couple of minutes. Let me just explain what this is. So in here, what you want to do is you want to set this to your local time. So it's 5:56 here in my local time. You want to set your priority levels. For instance, I want to track all the expected impact, high level, medium, low. I want to see it all, and I want to see it versus the dollar, the US dollar. Okay, that's the filter. So set that filter right here, and you're going to get all these news events. So Monday we had pending home sales, high impact, 7 o'clock Pacific. Here CB Consumers Confidence was Tuesday. Working our way down, here's Wednesday. Here is the crude oil inventories, right here at 7:30. Now they're always, for the most part, on Wednesdays at 7:30 Pacific. So just adjust that to your time. Now, with the exception to that is if you have a holiday. If there's a holiday that week, sometimes they push it to Thursday. Thursday, you had all this news pre-market. Unemployment number, Yellen speaking. We had an ISM number here at 7. The reason it's important to track all this is because many times these numbers, like the ISM, consumers' confidence, these pending home sales numbers, particularly at 7 o'clock, many times they can cause a trend reversal. They can cause a trend reversal. So a market can be coming down. It can be descending. Sometimes a number comes out, it's bullish or bearish, and the market trend can change. So you want to always be aware of when these are occurring, especially for, like Nat Gas, for instance. We tracked Nat Gas today. NG, we pulled up an NG chart, and we got a couple of trades out of it, remember? If you were in the room, remember? Sets up a Band-Aid, we go long, we go short, we get some trades off the news. We're trading the news. So let's look at tomorrow. Tomorrow's a non-farm payroll day. Those numbers come out at 5:30 Pacific, 8:30 Eastern, and they normally have a market impact. So if you're watching the market, give it a couple of minutes, usually at least a couple of minutes, sometimes 3 or 4 or 5 minutes. Let the market settle into a groove, and then we should get some nice swings tomorrow. Swings up, swings down. It should be a nice roller coaster day with all this. And we have factory orders at 7 o'clock, but that's medium impact. So we're looking for a rock and roll day tomorrow. Okay? So that's when crude oil inventory. If you can, bookmark this. Set the time to your local time zone, and then put your filters in, and then click on the week. So for instance here, you want to synchronize the time, and I'm here in Pacific time, so I save settings, and I'm synchronized. Okay, all right, that's what I had for tonight. That, in a nutshell, is how to incorporate using larger time frames with your with the trends on your charts. How to work those two together. How sometimes you can get good direction, you can get support and resistance levels